companies are part of Zinnov's GAP platform. Part of GAP is CoNext, which stands for Collaboration Next. And today's webinar is being driven by the CoNext practice. At CoNext, our focus is to help organizations build their innovation capabilities, both external and internal. On the external side, we have organizations with their startup collaboration programs and academic partnerships. Whereas on the internal side, we help individuals within large corporates to drive innovation with the mindset of an entrepreneur. Conext has hands-on experience with corporates, industry bodies, and cross-border government institutions. The logos that you can see on the slide, Prashant, if you could just move to the next slide. These logos have put faith in our abilities and execution, enabling us to learn what works on the ground and what can be applied in the market. Now, when we think of the year 2020, we think of the way in which the business ecosystem and landscape was challenged and forced to respond with grit and tenacity. It gives us immense pride to be able to talk of the resilience shown by the ecosystem, especially in bringing forth the roles of technology, entrepreneurship, and innovation in maneuvering this crisis. In today's session, we will specifically magnify the power of open innovation that we observed throughout the unpredictability of 2020. The force of collaboration enabled corporates and startups alike to emerge into positions of strength, driving both quick and effective outcomes. Today's webinar will outline the key insights derived through the NASSCOM Zinnov report on the Indian tech startup ecosystem, some of which include a 12 to 15% increase in open innovation programs run by corporates, 12 Indian unicorns being added in 2020, more than China and behind only USA, 28 to 30% of Indian startups building products for global markets, and 14% of investments being in deep tech startups, 3% higher than that of 2019. We trust that these insights will be of value to your growth strategy and enable you to factor a collaborative approach into your future prospects. As per today's agenda, as you can see on the slide, we will now move into a keynote talk on key trends from the Indian startup ecosystem in 2020 by Atit Danat, the principal and head of the Conext practice at Zinnov. Following this, we'll move into an open discussion and Q&A section. You may ask us questions in the Q&A tab that you'll see at the bottom, which Atit will answer towards the end of the webinar. Another quick call out, we'll be sharing key insights from the startup landscape and simultaneously be running polls that will appear on the right side of your screen. Please do participate as it helps us all learn how we think as an ecosystem. I now invite my colleague Atit to take the session ahead.
So, very good morning to all of you. Thank you so much for joining us for today's presentation. We're going to keep it very focused and very specific today in terms of giving you the key insights of the Indian startup ecosystem vis-a-vis the year 2020. The intent for today's discussion is to allow you the inputs that may be required as you think about your plans in the current fiscal year and as you prepare for the coming fiscal year, which is there. So as we think about the past year in terms of the year 2020, a couple of things became extremely evident. We know for sure that there was impact on the business. There was impact not just on technology businesses, but also non-tech businesses, with the complete country and the world coming to a standstill. And without doubt, this has had a very negative impact on the startup ecosystem, where for the first time since 2017, we saw a significant increase in the number of startups that ended up closing down. This was completely unexpected, but this was also something, as we dig into the data, we realized was not out of turn completely. What happened was that majority of the startups that closed down in 2020 were predominantly B2C companies, and these were also companies which had been active for about 2 to 3 years. And the immediate insight what we were able to garner was that this death or this debt pooling of the startup was something which would have anyways happened about 6 to 12 months without COVID, but just got accelerated because of the pandemic. Now, why do we say that? We say that is because we have seen certain very specific silver linings as far as the startup ecosystem or the general Indian business environment is concerned. The digital maturity of Indian enterprises has increased. As large companies thought about responding to pandemic, everybody shifted to contactless, presence-less solutions, and by default shifted to technology. We also saw a significant increase in number of active internet subscribers in the country. A lot more people had to get connected to internet because they could not go to schools, they could not go to offices, they could not go to their colleges, and they also had to take care of the essential services. And consequently, there was a certain upsurge in terms of number of people individually connected. So think about your homes. You had one internet connection, and also you went in for a second dongle to be sure that you are connected as your spouse is also working, or taking care of children as they're studying with some remote education institute. We just saw a significant uptick in number of people actively connected to internet. On top of it, we had the whole Doklam challenge, which happened for the country, and there was a sudden wave of Atmanirbhar Bharat. This happened for two reasons. One, of course, Doklam. The second was the fact that as we thought about responding to COVID 19, we very quickly realized that the world could not really do much for us. Everybody was trying to take care of themselves. So, whether it was ventilator or masks or any other solution from contact tracing perspective, eventually everybody had to fend for themselves. And who better, than to look at our best people to solve those particular problems. We of course saw remote work happen. A interesting impact of remote work on the startup ecosystem was that it immediately had an impact on the burn. Startups which have been known to have fancy offices, have a lot of perks and benefits for people in terms of breakfast, lunch, and a lot of activities. All of that spend went away completely. It was not a prerequisite to engage people. It was not a prerequisite to hire people, and that took away a significant cost, which in turn converted to a larger revenue, sorry, a larger cash flow that they could extend from a runway perspective. And then finally, what interestingly happened was that because the geography did not matter anymore, everybody was working from home. We saw a great uptick in terms of cross border consumption of Indian solutions and technologies. We also interestingly saw the government's response to COVID 19, wherein they wanted to look for solutions from India, which in turn allowed startups to repurpose their capabilities and to be able to offer new solutions into the market, thereby earning revenue and surviving till the time their main markets returned from a business perspective. All in all, what we have seen is that in spite of one of the highest numbers of shutdowns in the startup ecosystem, in spite of all the business challenges, the Indian ecosystem continues to grow. We grew this year by about 8 to 10%, with about 11,000 plus startups active in the country today. Now, mind you, when we call a startup here, our definition is slightly different from the government. The government talks about a startup as a company which is up to 10 years of age and less than 100 crores of revenue. We define startup in terms of NASSCOM Zinov definition as a company which is less than 5 years old, which needs to have a technology product or solution which is already solving for customer needs. It's not an idea company. And more critically, there is an element of innovation. And consequently, what we do is we prune through close to 40 to 50,000 companies and then arrive at a number of 11,000. Simply put, these are the 11,000 companies that you as a corporate would want to engage with, or an investor would be really keen to track and figure out what next to do. The interesting part, however, is not just in the numbers, it's also in terms of the composition of the numbers. About 45% of these startups are B2B companies. Until 2019, this number was 43%. If I go back to 2017, this would be maybe about 34%. Regardless of the numbers, one thing is very, very clear, that we are not just a B2C ecosystem, we are also increasingly becoming a balanced B2C plus B2B ecosystem. We have startups across 25 different industry verticals. About 28% of these companies are looking at global markets as their primary customer base. So we are not only seeing startups build solutions for India, but to build solutions for the world, and many a times to build first for the global markets and then actually launch them in India. There are a lot of examples, and we'll come to some of them as we look at the unicorns which we have had this year. The other interesting part is roughly about 20-25% of the base has already raised certain external capital in terms of a seed funding or an angel funding, right up to a Series D, Series E funding, which brings you a step closer to a unicorn status. And the most interesting part, which I love, is that if you look at the unicorn pool of India, what we are seeing is that 60 to 65% of all the unicorns in this country have been founded after 2010, but more critically, seven of them were founded in less than 5 years ago.
This gives us an indication of not only having the numbers, but also acceleration in the ecosystem where founders are learning how to build startups quicker and better. Speaking of sectors, I think one thing which happened due to COVID-19 was that certain sectors saw a great bit of acceleration. We saw enterprise tech, we saw healthcare, financial services, education, human resource, think engagement, remote onboarding, advertising marketing because content picked up, retail tech because you no longer had to go to stores, and of course supply chain logistics see a lot of new startups come into the play. And consequently what we are having is that with each passing year we are seeing a great mix of sectors in the startup ecosystem. Now why is this interesting? This is interesting is because it shows us that our innovation or our ability to build businesses very fast is not just limited to one or two sectors. If you look at retail, it's not the biggest sector. Yes, Flipkart is there. Yes, Big Basket is there. Yes, we knew about Snapdeal, but they broke out early on because that's the traditional norm. In every ecosystem, the B2C startups become popular first. You see that in your business also. B2C business is always valued higher than a B2B business, and hence they come upfront very, very quickly. But there is a lot of solid element in terms of work happening when you look at enterprise tech, healthcare, financial services, education. Not just that, we also see a fair bit of activity in industrial manufacturing. We are seeing a fair bit of activity in mines and minerals, and even oil and gas from that particular perspective. In terms of COVID 19's impact in 2019, what we saw was that it has overall provided a lot of tailwinds to the business, to different sectors in terms of their growth. We ended up doing analysis where we looked at what was the impact of COVID 19 against what is the future risk of these sectors. And when we talk about future risk, we're talking about how much they have already recovered, how is the unlock going to impact them, at what pace they can really hope to recover to the older markets. And what we find is that minus elements like energy, industrial, manufacturing, mobility, or something like travel and hospitality, a lot of sectors either have had a positive impact or a neutral impact for a sole simple reason that both businesses and consumers went online. Both businesses and consumers were looking to actively search for new solutions for the problems they already had. And eventually, what happened was the cost of acquisition for a startup came down because now not only were they hunting for their customers, but their customers or potential customers were also hunting for solutions. Take for example a company like Magic Pen, which is focused on food and beverage industry in terms of creating loyalty programs or discovery programs. Typically, they would have to have people on the ground going shop to shop, installing those signboards, installing the software, and convincing people the value of being a partner to them. Because of COVID-19, a lot of food and beverage, non-tech offline shops started looking for solutions like Magic Pen, and their cost of acquisition from 120 rupees per account came down to 15 rupees per account. That's one tenth of the original cost of acquisition. Has an immediate impact on the revenue that the company is making, on the profitability of the company, and certainly the valuation of the company. The other interesting part is that when we talk about 5 trillion digital economy in India, 5 trillion economy in India in 2025, that is built on the emphasis on 1 trillion digital economy by the government. There's a beautiful document by MIT, which was released in 2018, articulating that how about 380 to 500 billion dollar of digital economy will come from newer use cases and newer opportunities in fields like financial services, healthcare, education, agri-tech, and enterprise. And what you would notice is that a lot of these core sectors or priority sectors from India's growth perspective and our economic strength perspective have actually been supported due to COVID-19, specifically from a digital care perspective or digital financial service products perspective. This is one of those moments which, similar to demonetization, ended up creating a lot of havoc, but also creating a lot of goods, is what COVID-19 has done. It has made lives miserable. It has, pushed a lot of people in poverty. It has shut down a lot of businesses. But when you think about as a ecosystem, as a country, and how we have responded to it, the signs are really, really promising in terms of things that can come in future. Now, this is also evident not just in terms of numbers of startups, but also where they are coming from. For the longest time, people think that in India, innovation is all about Bangalore, or they think about Bombay or Delhi NCR, which is very true in terms of where the majority of the startups are. But when you take a step back and when you say that, okay, in the last 5 years, where are the startups really emerging from? Are the startups only emerging from bigger cities, or are they also emerging from smaller cities? The story is, in India, startups are emerging from anywhere and everywhere. It reflects our ability to really tap into the digital dividend, the youth dividend that the country has of growing the economy. What we did was we, removed 6 cities. We removed Bangalore, we removed Delhi, we removed Mumbai, we removed Hyderabad, Pune, and Chennai, and we said, okay, what does the map look like? And you would see in states like Gujarat, Rajasthan, Uttar Pradesh, there are a lot of smaller HubSpots coming up. In states like Madhya Pradesh and Maharashtra and Tamil Nadu also, there's a really interesting activity which is happening. And this is what is extremely promising, not just in terms of the heat maps, but also in terms of numbers. About 28% of the startups are right now established outside bigger hubs. 64% of India's incubation and acceleration facility is based in smaller cities, in tier 2, tier 3 cities. Almost about 14% of all the funded companies come from these locations. And this is not just one or two locations. We're talking about Ahmedabad, Jaipur, Kolkata, Kochi, Tiruvananthapuram, Kanpur, and so many more. um, the core point here is that when you think about the world, we think about heterogeneity. When we think about India, we talk about heterogeneity. We talk about diversity in terms of our culture. We talk about diversity in terms of our business, and how we do things. We are also talking about heterogeneity and diversity in terms of the kind of problems we are solving, and in terms of the locations from where we are solving these particular problems. Accelerate 2 to 3 years from now, what we will see is that Kochi will most likely be a space tech hub. We will see Kanpur and Indore, focusing a lot on India problems, which is there. We would see Ahmedabad come out as a second financial center in the country beyond Mumbai in terms of the kind of startups who are coming out. The other key question that we always receive from corporates and from companies is to say that, okay, we are seeing a lot of companies come in, but what is the innovation, right? Because, I mean, innovation happens in Silicon Valley, right? Innovation happens in Israel. It doesn't happen in India. And I dare say that's completely wrong, right? For two reasons. One is innovation is very different from invention. Innovation is something that people use, people buy, you get paid for, and you're able to constantly expand on it. Innovation is not just limited to technology. Innovation is also in terms of how you change your processes and how you change your business model. But all of that said, what we are definitely seeing, just to keep things simple, is India innovating on technology as well. Close to 2,100 startups, which is roughly about 25% of the base. 20% of the base is using deep tech. This is up 31% from the previous year. We are seeing a huge adoption of AI, followed by IoT and big data. Now, AI is something which is getting adopted for a variety of reasons. The first biggest reason is that AI as a technology is applicable in almost every spectrum of life that we see, every spectrum of industry that we talk about. It's applicable both in terms of hardware. It's also applicable in terms of software industries. And in that sense, there's just a huge ability to be able to deploy AI in variety of use cases. IoT is something which in 2020 very specifically did not see a huge adoption, and a predominant reason for this was that the supply chain was completely broken for anything hardware. And consequently, building out a new product was a lot more difficult. The second piece, of course, was that when you had to implement this at a client site, we lost about 3 months, which is April, May, June, completely, because everything was shut down, right? Unless you had a COVID-19 related use case that you were solving, which was a priority problem to solve, say contact tracing, or in terms of queue management, odds were that IoT or any physical deployment was impossible. That being said, looking at what's been happening in the last few quarters, we do expect IoT to become significantly big component of the ecosystem, because we are looking for those remote contactless solutions in every spectrum of life again. So whether it's in terms of you checking into a metro or a bus, you want a contactless solution. When you're talking about running a factory, you want the check-ins or employee screenings to be contactless. But more critically, you also want them to be connected, because you want a lot of data to be transferring outside the paper. It's all getting digitalized, and hence it just becomes easier to use sensors a lot more. The other interesting fact, tying into the initial point, is roughly about 20% of these deep tech companies are again based outside larger hubs. We do see a very strong prominence of Bangalore, Delhi, NCR, Mumbai, Chennai, Pune, Hyderabad when it comes to deep tech. One key reason is that if you look at the ecosystem for deep tech technologies is much more stronger here. You have more colleges, you have a lot of R&D centers of global MNCs and Indian MNCs based in these locations. And consequently, over a period of time, a lot of expert intelligence has been built into this ecosystem because the experienced people, the smart people live in these particular cities. But it's only a matter of time. What we anticipate is like how we saw the smaller cities generate more and more startups with each progressive year. We do believe something similar will happen as we go forward vis-a-vis adoption of deep tech. The other piece, of course, being is that because remote work has happened, a lot of smart talent has decided to go to smaller cities to reduce their operating cost and build startups from there. So that talent migration is also gonna help us a lot as we think about adoption in smaller cities. All right. Now, the interesting piece this particular year was also that in 2020, despite the pandemic, to Rashmi's point earlier, we saw the most number of unicorns being added in a single year. We had about 12 unicorns, taking the total tally to about 38 as on date. And this was only behind China, which added about 8 unicorns. Sorry, only behind USA, which added about 30 unicorns, and China, which sees a lot more funding from than India, saw only about 8 unicorns come in. The question was what unicorns were these and how did they come about? I think what we saw really interesting was that we saw unicorns emerge in automotive, right? We saw unicorns in education, we saw unicorns in advertising and marketing, we saw unicorns in supply chain. A lot of these sectors were not prominent few years ago. For the longest time, the story in India was that we would have unicorns only in B2C, in e-commerce or retail, or we would have unicorns, say, like Ola, right? Because we were copy pasting someone's model. But that narrative is completely destroyed now. If you look at a product like Glance, which became a unicorn in 2020, this is a product by another unicorn in Mobi, which itself achieved the status in 2011. And this is a pattern that we are seeing more and more. One of the companies which became unicorn this year was Daily Hunt. And the key reason they became unicorn was because they had a product called Josh, which was launched after the lockdown, after the Doklam incident. And it has become one of the most popular short format video apps to replace TikTok in the country. So it is our ability as an ecosystem to nurture entrepreneurs who can go after variety of problem statements and solve them. It is our, inherent need as a country with a population of 1.3 billion people at varying paying propensity, for whom digital solutions or life's aspirations are not very different from somebody overseas. It's just about figuring out how to make a particular solution work at that particular price point to tap into the market. The piece which has been very intriguing generally for people is that more and more companies that we are seeing today are focusing on global markets. About 67% of the unicorns which got formulated in 2020 were already selling into overseas market. And that's the other interesting piece. The Indian companies are going global a lot more sooner in terms of going after the opportunity out there in the world. Now, this unicorn element happened on backdrop of not just COVID-19, but also a very different investor reaction because of COVID-19. What we saw was that because of the lockdown, suddenly the way you ran your business and what all you could achieve or what you could hope for had to completely change. People had to rethink their businesses, and without doubt, we saw stock market crash. And something similar happened in the investor sentiments, where the private equity or the venture capital investors decided to take a step back because they wanted to understand how will COVID-19 really pan out? How will this lockdown really pan out? Is it going to affect a business? If so, for how long? Is it going to open up new opportunities? Then are those opportunities going to be present post lockdown also? So they had to spend a lot of time reformulating the thesis. And unfortunately for us as the ecosystem, we had a great quarter one, but we had absolutely horrible quarter two in terms of April, May, June. And there was a significant dip in the funding. That being said, we have seen the funding return beautifully in the second half of 2020, where it was almost 2x of the first half. And what our anticipation is that by end of this year, the funding levels will be, if not higher than 2019, definitely at par with 2019. Now, mind you, in spite of the drops in investment, we saw more unicorns come in. So there is something right going on in the ecosystem. The element that has been really exciting is in terms of looking at the median deal sizes. So if you look at early stage, seed stage, late stage funding, what you see is a steady progression or steady state of investment deal size. Why is this important? Because investors tend to have a playbook, and that playbook is their process, which is repeatable and replicable, so to say. And this is one of the key indicators where you get to see that if yes, I am making an investment, but I'm making a serious investment, or I'm just giving lesser amount of money. And what we are seeing is that that investment seriousness or that belief in India's opportunity is really, really strong. Investors are taking bigger bets in terms of investing in companies. They are cutting larger check sizes as they come in. Not just that, what we are also seeing is that the India narrative is really, really strong because, year on year, first half to second half, the number of unique companies which raise funding for the first time is also increasing as a percentage share. In 2019, of all the deals that happened, only about 30% of the deals, we had companies who were raising capital for the first time. Everybody else was raising a follow-on capital for their series A, B, C. But what we are seeing is in the year 2020, a lot of new startups got funded. A lot of new startups were able to raise money. And this is early stage funding, mind you. This is during COVID 19, where people are still trying to figure out what's going to happen. But what this tells us is that the investors are still very gung ho about India. What it also reflects is the entrepreneurs are able to create businesses very quickly, turn crisis into an opportunity, and do it in a way that people trust them and believe in them. If we look at another metric in terms of unique number of investors, that is again where we are seeing a good steady return of investors coming in. Predominantly, what we are seeing is that venture capital and angel investors, who are the most active segments in any ecosystem, have started to return. Close to 54% of the investors who participated in 2020 had also done in 2019. So their belief continues to be really, really strong. And these companies or these investors are not any small investors. We're talking about a really exciting, multi-billion dollar funds like Axel or Sequoia or Lightspeed and Nexus, and also a lot of Indian funds like a Bloom or Better Capital or Charate, which are gung ho about the ecosystem. So it's not just local investors; it's global investors, investors of repute, investors who others look at in terms of their strategies and execution to figure out their own approach, for their business. Um, this impact in terms of investor participation has been also wonderful in terms of the variety of companies which have been able to take money. It's not just the unicorns who have raised capital. To give you a perspective, in 2018, 50% of all the funding which happened in the Indian ecosystem went only to unicorns. And that has changed significantly in 2019 and in 2020, where unicorns only account for about 25 to 30% of all the funding. The remaining 70% goes to the larger ecosystem. And that is where we have close to 55 plus companies who have raised more than $50 million of funding. These are what we call as potential unicorns. And our estimate is that this year we will see more unicorns come in because we have very, very solid pipeline. We have this pipeline across a lot of different sectors. And this pipeline is definitely increasing despite all the challenges that we end up facing. Coming to corporate participation, here it has been a mixed, entity. I think two things happened. Much like investors, the private investors or venture capital, the corporates also had to go through a sea change. Their operating models had to change completely because of business continuity. They had to figure out how to, continue making steel, or how do you continue making automotive cars, or how do you, just make sure that you're shipping the products. And consequently, the leadership focus shifted completely on ensuring that they protect what they have currently. What it also did is, by turn it slowed down the process of decision making in terms of making new investments. What it made more complicated was the whole M&A part. M&A by nature has been a very offline activity where you have multiple meetings with people in a company, you have multiple discussions, you go see their facilities, their sites, and then you take a decision. And then, of course, you work on integrations. That complete playbook had to be rewritten. And this is something what we saw not just in India but across the world. The cross-border transactions from M&A perspective dropped down. However, what really picked up well was open innovation. As companies decided to solve for their business continuity needs, as they started to think about new growth avenues and new growth opportunities, one thing became very, very clear is that they have to respond very quickly, they have to respond very, very proactively. And this is where they decided to focus on open innovation, because open innovation by its nature gives a lot more flexibility to a company to look at different aspects of business. Speaking of investments, from a corporate perspective, just to give you a bit more flavor, what we have seen is that the investments have been more or less similar from a stage distribution perspective. There is a drop in early in seed stage. This again, I would say, is because of the complexity of decision making. Seed stage, you have very less data. You slightly need a bit more time to figure out if you really want to invest. And as we spoke about bandwidth constraints, it is only evident that the companies wanted to, or the corporates wanted to bet on startups which are slightly a bit more mature in terms of their investments. The variety of companies investing remains of top quality. We have Samsung, Siemens, Unilever investing in the country. Someone like Tencent invested in the first quarter, and their investments have slightly been tepid because of the whole India-China issue. But overall, I think the exciting part is that they are investing across sectors. And as corporates, firm up their strategies for 2021 and beyond, we do believe that investments will pick up because there will be need for speed, and consequently, corporates will be a lot more aggressive to figure out what next to do. They wouldn't want to lose opportunities. In case of M&A, very similar to what we saw in investments, we saw a significant drop in first half of the year, but we have also seen a recovery. The other piece, what we saw was that much like investment stages, the companies are preferring more mature companies. They are preferring more older companies, which are there. Now, two very, very key things. I think both these elements, talk a lot more about behavior and the challenges inside the organization, and so much so about the corporates' trust or interest in India. The interesting piece, however, was that the activity has been led by Indian MNCs, and we are seeing a drop in the global participation. We looked at this data a bit more closely, and we tried to see what's happening in US, what's happening in Europe, and we saw similar trends. More American companies were acquiring American startups. More European companies were acquiring European startups. Everybody was operating in their region. The cross-border investments and acquisitions from a corporate perspective in general dropped for a variety of operational aspects which are there. Moving on, in terms of open innovation programs, as we spoke, there has been uptick. Again, here, what I personally love is the variety of corporates working with startups, the sectors that they come from. And if you see, we have everything here. We have oil and gas, we have energy, we have aerospace, we have consumer goods, we have semiconductor, we have industrial, we also have real estate. Um, this is a story which is extremely critical for the audience to consider. Yes, you can always acquire a company. Yes, you can always invest in a company, but the check sizes that you have to cut is significantly higher, which means you are taking on a lot more risk. Relatively, open innovation programs are a low risk, high volume business which just allows you to experiment at a rapid pace, qualify an opportunity, and if it really works for you, then you invest. It gives corporates a significant edge in terms of what they can do versus any other investor out there. It allows you to capture both extrinsic value, which is the commercial partnerships, and also the intrinsic value, which is investments and acquisitions out there. And the core reason these programs work is purely for the flexibility. As long as you're focusing something which is important to you, it is relevant to your India and your global strategy, and you have a very clear hypothesis in terms of why you are working with that particular startup. All you need to do is to create a structured program which allows the startup to build out a prototype, iterate it, and then give you a demo where you're able to take a very data, insights, and operations led view. Instead of just doing it on paper, you get to see how it really works in real world. and then figure out what you want to do with them. You can always sign a commercial partnership, or if the startup is really exciting, it's really core to your business, you can also make an equity investment in them or acquire them very, very early. This capability of being able to test out variety of solutions quickly while keeping your options open is the simple reason why open innovation is picking up really well in the ecosystem today. The other piece, of course, is that this is no longer theory. Companies, as they deploy, they're also seeing very real, practical wins in the ecosystem. They are able to figure out, what's working, what's not working, and we have some really interesting case studies from almost every industry, right from healthcare to banking. To something like semiconductor and networking to automotive, where companies are seeing very tangible business wins for themselves in terms of being able to accelerate their business journey. Lastly, and as we wrap up this presentation, I think while we spoke about the numbers, we spoke about investments, we spoke about acquisitions, we spoke about corporate participation, the piece which gets missed out more often than not is the structural fundamental changes at the core. And that is in how you do things, right? Not just what you do, but how you do these things. And that is where we believe that 2020 has reshaped the playbook that a founder uses to build their companies. And fingers crossed, this playbook will sustain for a longer period, but it will also give a very unique Indian flavor of building startups. We will not be copying only Silicon Valley in terms of what are the best practices. We believe remote work is going to be extremely critical. Companies are going to focus a lot on employee experience. PhonePe just announced $200 million ESOP play for their employees. 2 years back, nobody could even think of these particular pieces. We only had few examples of Sridhar Vembu at Zoho doing something like this, but very, very few people have been able to do it. Now it's becoming a norm. We are seeing focus on profitability, not just on the revenue. So it's value, not valuation. We are looking at founders being a lot more comfortable going global when they think about working with startups, when they think about working with their peers, or looking at markets overseas. We are also looking at startups learning from 2020 experience, where they repurpose their capabilities into newer sectors to say that, okay, how do I look at adjacencies? So InMobi built Glance, Daily Hunt built Josh, Paytm built Paytm Mall, Ola built Ola Electric. How do I go into adjacent markets and capture more and more value? And last but not the least, how can we as an ecosystem partner with each other, tap into each other's capability, and build in future? And all of this, allows us to be super excited about 2021. We believe that the ecosystem will keep growing. In this particular year, we'll see a lot more adoption of deep tech. We'll definitely see increase in investor and corporate participation as people rush to go after the Indian growth story. We will see this translate into more investments. If not, more than 2019, it should definitely be similar to 2019. Most interestingly, I think we will see our Unicorn Club expand to more than 50, with about 12 more additions into the ecosystem. And then finally, the exits. I think what we will start seeing in India is more and more startups being bought out or going for their IPO. Stay tuned with the Sensex, stay tuned with what NSE and BSE are doing, because over the course of next 24 months, a lot of brand names in India like Zomato or Policy Bazaar are going to get listed. So now is the time to start studying how they work and to figure out if you really want to invest for yourself and for your families, but also to think from your company's perspective as to what your strategy is going to be, how in your job you're going to really leverage startups. And with that, I'll maybe open up the floor for discussion. Rashmi, Prashant.
Yes, Atit. So before we go to the open discussion, just wanted to quickly take the few of the poll questions that we took today, and would be good to understand your perspective also to that. But this is what you're, is it the same what you're hearing from the industry, or do you have a different point of view? We'll take a couple of questions from the polls, and then we'll move to the open discussion. Also, to all the attendees, please share your question in the chat and the Q&A tab. We'll be happy to take those. So one of the questions that we asked was, again, due to the COVID-19, are you seeing a change in your collaboration model with startups, obviously 75% of them says yes, and then of course 25% says there's no change. So is this the same trend that you're seeing in the ecosystem as such?
Yes, I mean, we definitely are seeing a shift in the playbook in terms of how companies engage with startups. I think the other piece is we are definitely seeing more and more corporates inclined to work with startups, right? And we very briefly spoke about how startups are partnering with other startups. So we are also seeing that trend. So someone like Flipkart launched a program during COVID-19. Very recently, Amazon launched a program for D2C startups in India. And my sense is that we'll see more and more unicorns sort of, try and beat the corporates at this game in terms of partnering with younger companies. But yes, the playbooks are iterating, and more people definitely want to be, engaging with companies.
Great. Another question was, what is the impact of COVID-19, the overall budgeting for running the startup programs? 29% said increase, definitely. There are, again, 29% said decrease, and maybe 43% is on the where it says no change. So what's your take on that?
So we had done the study, I think, in July, August of last year, where we tried to look at maturity of a program in terms of what they were doing from a process perspective, and in terms of the outcome that they were able to drive before COVID-19. What we wanted to basically see was the trust that the organization had in the team, and wherever the trust was high in terms of being able to show outcomes and the refinement of processes, I think we saw all of those programs see expansion in budget. There were very few programs which were doing well, but the company was not doing certainly well because of COVID-19, and they had to see a reduction in budgets. But in general, budgets have been either similar or they have expanded. The expansion has been purely on account of the team being able to give outcomes. So it's a business which is conceptually not very difficult to understand, but it depends a lot on internal participation, that requires a good relationship and trust that you end up building out, internally. And the ones who were able to do it saw a good expansion in the budgets in their role as individuals, as teams within the organization. So
Great.
very similar, I would say. Yeah.
Okay. So another question was, what do you think M&A, status of M&A in the next 6 to 12 months? 71% said that expecting M&A to rise. 14% said no impact, and then again the same 14% says M&A is going to drop. Your understanding from the ecosystem?
Yeah, I would hope it doesn't drop because I think it's already pretty low in 2020. We saw the numbers compared to previous years. I don't think it'll drop purely is because of the baseline, right? If I just step back and do a very, unbiased view, I think odds of increasing are significantly higher. If I again just look at the numbers, but if I look at emotions, trends, if I look at how companies are reacting, then I would say they definitely are going to increase. Purely is because people will not just be solving for capabilities, they'll be solving for capabilities in a shorter period of time. So that time factor is what's going to be driving that M&A, saying that I need to reach my goal a lot more faster and quicker. So let me, just acquire, integrate, and push forward.
Got it. Another question was, do you see yourself pursuing any of the following objective with startups considering the impact of COVID-19? So 40% said mentoring startups to stay profitable in the long run. 20% was exploring anti-fragile business ideas, enabling digital transformation required at all levels to be more efficient, and again same 20% enabling digital transformation required. So 40% were mentoring startups to stay profitable in the long run. That's one of the objective corporates are considering while they want to pursue connecting with startups, considering the impact that we had with the COVID-19.
I think it's a great thing to do, but I do want to uh, say a few words of caution here. See, eventually, if you're mentoring startups in personal capacity, nobody's going to ask questions because we are using our own time to mentor these companies. But as soon as we start asking somebody else's time, or as soon as we start asking for more resources, odds are, if not today, tomorrow, the CFO or the CXO in general will end up asking a question that why am I spending this money? Why am I spending this time? So while mentoring is great, and I think it's a great short term thing to do, over a longer period, what we have seen is that these initiatives don't succeed unless there is a business reason to it, unless they're aligned as a program to business strategy or to general goals of the company. There has to be some value which has to be absorbed at a group level, at a company level. And this could be from a revenue perspective, it could just be purely from a base of experimentation perspective, or it could be from a cost saving perspective. But there has to be this one bigger goal in terms of why are you spending that time to mentor companies. The other part is the smartest founders will never take anybody's mentoring unless they see a bigger value behind it. Right? There are very few advisors who can give you master coaching, which is there not to say that this group cannot do it, but odds are very, very high that, if you are a smart founder, you will use your time very, very efficiently. You would want to take advice from somebody who wants to give you money, who wants to give you business, who wants to give you a network to them. And hence taking the advice makes sense is because you get to unlock that capital or that revenue opportunity or that network, so to say, right? So it's an exchange of trust. So you give me advice, I do those things, and hence I get access to a bigger value, with you. So defining that value is very key. And mentoring is that enabling mechanism to attract the right, startups. So you're building a two-sided platform. Just, it's good to be cautious and not make mentoring the core value or the core, mode of engagement without anything before or after it.
Understood. So the last question, which we asked, do your company currently support startup collaboration program through formalized program initiative? 63% said yes, 25% said no, and 13% were not sure. So my question to you, Atit, is, what will be your piece of advice to those companies who are running a very formalized startup collaboration program, who are into the maybe you can say a mature stage of it, and number two, a company who is thinking of starting it but don't know how to move ahead, and number three is certain companies who do engage with startups in the bits and pieces, but they want to put this into their strategic initiatives.
Um, okay. I think the ones who are already working with startups, I would love to talk to you. I would love to exchange notes in terms of how you're doing it. It's a subject that we love at Zinov. So Rashmi, Prashant, myself, we constantly try to keep ourselves abreast. So we would love to talk to you. For the ones who don't have a program, do consider it. I'm sure there's a reason why you have not been able to launch it currently. But that being said, there are two, three, four things you need to do to build out a business case. It's not very, very complex. But if you feel for whatever reason that the company has not looked at this opportunity in the right light, then it's good to sort of take that initiative and propose it again, even at the cost of them saying no. But we can definitely do two or three things which improve your odds of success even as you put in the business case. And the same is true for those who have initiative but it's disparate, it's not structured. Personally, I firmly believe that partnerships, innovation is going to be a key department or a function in every corporate. Think of it like a HR team, which is there. At one point in time, HR was, so to say, workforce management given to the line manager, when factory started. And then over a period of time, it became a very specialized department. Innovation, partnerships, collaboration, something similar. Right now, it is at a BU level, at a team level, at a product level, but it's gonna eventually boil down into a set of people who understand how to make it really, really work. And this team will be the subject matter expert, within the company, which just unlocks, the learning and the acceleration for rest of the organization because they just know this business really well. So our sense is it's going to get formalized. It's still under evolution. We'll figure out what structures really work in the long term. But there is definitely going to be a function which is going to, be a subject matter expert. So there's a lot of value in formalizing these processes. Best things for the one who don't have a program and who are looking to, drive a formal program. So talk to somebody who's already doing it, take from them the experiences that they had. I'm very sure they'll have a lot of war stories in terms of how they convince people internally. But without doubt, I do feel that this is something which will become a capability. So the earlier we start, it's great for us as individuals to learn this for our own future growth. It's great for us to create impact in the company. It's great for the company itself to grow over a period of time. So
Got
yes,
it.
definitely consider it.
Understood. I think we have Dipankar Mukherjee who has raised the hand. Dipankar, I'm going to allow you to talk. So if you have any questions, please feel free to ask Atit.
Yeah, great. So, hi, I'm Dipankar. I'm part of Tata Communications Corporate Venturing and Innovation team. Uh,
Mhm.
we have a very full-fledged open innovation programs where we have engaged with more than 2,500 startups in the last 3-4 years. So I just wanted to kind of ask around the Indian ecosystem how mature or let's say that if I'm looking for startups in a particular domain, how quickly can you? Is there a mechanism? Is there a place where we can find a little bit mature startups which we can productize alongside our own line of businesses and then take them to market? How do you see these GTM discussions coming into play? What are the mechanisms to do it? If you can just throw some light on that, that would be great.
Got it, Dipankar. Thank you so much for the question. I think if you look at the different kind of open innovation programs which are there, so if you look at someone like a NetApp or what say Wipro runs or when Infosys is running, the core anchor there is joint go-to-market in terms of giving access to the customers and being able to generate those particular revenues. There are two broader ways that we have seen this materialize. One is to your point is eventually what you're solving for is to say that I need a solution which I can take to my customer. The biggest hindrance in this process we have seen, or the biggest supporter that we can have, is the sales and the services team, which actually interact with the end customer. And many times it's eventually about convincing those sales and service leaders than the customer itself on the value. So for us, the lens in terms of calling some startup mature is not so much in terms of funding, but more in terms of a startup which gives that comfort to the sales pre-sales team to be able to take that solution to the company. And there's a lot of effort required around coaching the sales team before you even pick up a startup. So it has impact on their incentives. It has impact on how they even position a third party solution to the end customer, how they think about these solutions. I think a very good example is the Microsoft Co-Sell program, which is there. And what Microsoft does is they have two tracks. If a startup is mature enough, directly comes into the co-sell group. If it is not mature enough in terms of their capability to sell, right, not just to build a product, but capability to sell the solution, then they go through a program called as Microsoft Scale Up, wherein they are given very specific technology, product, and business coaching to make them ready for the Microsoft sales team and eventually for the end customer. Now, vis-a-vis sourcing for these particular startups, I think one thing which doesn't work is, and database is just a starting point, right? I'm pretty sure you would have seen this yourself, is that, when you reach out, there's this flurry of startups who are out there who are, providing different solutions. The trick is in terms of being a bit creative when you're looking for these solutions. And I'll give you an example for one of the programs that we were running. We had a startup with one of our networking programs, and this startup was focused on image enhancement. And we were able to talk to them, have a discussion, and then eventually, convince them to come into the healthcare segment to be able to, deploy those image resolution techniques so that the amount of time required to take X-rays reduced without sacrificing the diagnostics on top of it, right? Uh, that's a very classic scenario where a bit of creativity is required. So I think what you will see is you will see a fair number of startups, depending on what segment you're looking for, already ready, conceptually for joint go-to-market. But apart from solving for technical integration, you need to also solve for integration with the sales team which is there.
Understood. I think, Atit, in the interest of time, would you just give a closing note and close the session? And to all the attendees, just a heads up, we will be sharing a condensed version of the presentation to you for your future reference. Atit, over to you.
Yeah, I mean, we would love to talk. We truly believe in potential of partnerships. We truly believe in ability of people to be creative. We do believe the fact that open innovation will turn out to be a long-term function and capability of any organization. Anything that you need to think this through, anything that you would want to know more, we would love to talk about it. So thank you so much for your time. I know we are over the hour, but happy to converse. Have a great day ahead. Thank you.